Hello and welcome to the weekly market analysis for gold and silver. This is Brandon Wendell, Charter Market Technician. This is the week of December 5th. So we'll go ahead and jump right into it and take a look at this. And looking at the February charts now for gold, since we're getting ready on roll over there with the volumes, what you can see is the RSI did actually pierce 40 on the most recent push to the downside there this past week. And that's a bearish sign. The fact that we couldn't hold 40 anymore tells me that there's likely to be more bearish pressure and pushes to the downside on the daily charts than there is movements to the upside. You can see it also with the dominance of red and the topping tails on those candles. That's all selling pressure. Unfortunately, on the daily chart, I don't have any demand zones anywhere nearby. So, yeah, there could be a possible inflationary hedge push on gold, but technically, I'm just not seeing anything as of right now. And seasonally, we're still technically in the bullish season for gold until the end of February. Typically, when Chinese New Year rolls around, that's when gold kind of goes into disfavor. Until then, though, it's usually somewhat bullish. But overall, everything I'm seeing right now is that we're going to be sideways and choppy or slightly bearish right now. Looking at the 4 hour chart, the projection that we had last week, that was a Fibonacci extension, you can see that we came close to 61.8%. And on all these rallies, these peaks that we're getting, unfortunately, we can't seem to get above 60, but we can get below 40. So that's suggesting that we may turn around from where we are right now and head down to stop once maybe at 1760, but ultimately at 1734. So this choppiness is likely to continue, but we're initially going to be moving down first before we get another little pullback coming up on the 4 hour chart. Dropping down to the 60-minute chart, this was last week's picture. Just wanted to go over that just to kind of show you what happened from our prediction. We saw a positive divergence. We tried to rally, but as you can see, we did a little bounce here off of a demand zone, and this little bounce was below 40 on the RSI. And typically when that happens, you don't make new highs without a pullback, and usually you'll see lots of bearishness coming in. So I was expecting prices to go down to the next extension levels. Maybe we go up to supply before we drop, but it's going to be a hard climb. Well, this week, basically what happened was prices did try to rally, and true to form, we could not get above the previous high. Again, if you go back right there, you can see this peak. I said we shouldn't be able to get above that because we were too bearish. And sure enough, as we rallied up, we couldn't get anywhere close to that previous peak. Pushed back down, still couldn't get above, and we actually made it down towards that first extension level. We bounced once more, and the interesting thing that's happened now is as we bounced off these lows, we did not go below 40, and we actually moved above 60 for the first time. Well, actually, the first time since back here. Now, that's no guarantee that we won't go down, as you can see, but we may not have as severe of a drop coming up this week. But overall, this is still a little bit more bullish than it has been, which suggests that we may get some choppiness and sideways movement rather than continuing to move down in gold. Either way, I'm still not seeing great trade opportunities, so I might want to look for something else rather than gold as a trader. If you're looking for something quick, as a day trader on Sunday night or Monday, you may get a bounce. If we do get a pullback above a bounce at 1777.9, 1775.4, reason is, again, on the 60-minute, we've got that bearish activity coming in, and we're seeing it on the RSI here as well in the 15 minutes. So I'm expecting maybe a little bounce and very choppy, but a push up to 1804 before we continue to go back down once again to try to tag that 1760 level. Silver, on the daily time frame, we can see we've experienced a bit of a change in trend. We had a positive divergence where prices tried to make higher highs. The indicator made a lower high, followed by a collapse. And in that collapse, as soon as we made new lows, right here, you see we made a new low. We also went below 40 on the RSI, indicating confirmation of the bearish trend. So I'm expecting now to have a small rally, but stalling out at 2345 to 2377. That's a shorting opportunity with your target being the 21 area right here, that 61.8% extension. So looking at this demand zone on the 4 hour chart, we had pointed this out last week, and that's where we actually hit. You can see we went deep into the zone, but we have a positive divergence. So that's telling me the price is going to rally just slightly. And once more, my ultimate target was 2345, which is it's kind of in the middle right here. But if we can't get that high, we're going to end up stalling out at 2277 to 2306 first, and then move down to 21,660. So really, I'm not going to be looking to go long here. I'm looking for shorting opportunities to join that overall bearishness that we're seeing on the higher time frames. And the shorting opportunities, either that daily area at 23.45 or the 4-hour area at 22.77 if we turn there first. On the 60-minute chart, we even have some selling pressure a little bit lower as well in the 22.82 to 23.06. So this area, that 22.70 to 23.06, can kind of be fine-tuned to a couple zones here on the smaller time frame. That way you can possibly enter a little bit sooner if you start to see prices turning around. And overall, we get some overlap here, some of the zones, extensions, but I'm still looking at 21.66 right here as the target. And you want to get out ahead of that, so maybe 21.750. So looking for a drop down from this 22.80 area to that 21.66. And that's what I'm seeing on silver. Even on the 15-minute, not really seeing much difference. There may be a little bit of stalling going on as we move up. We've got 22.68 as a little supply zone that lines up with the Fibonacci retracement of 61.8 that might push to the downside as well. But honestly, I think I'm really going to be looking more to the 22.82 to 23.06 area since it shows up on the 60-minute and the 4-hour for the shorting opportunity to push down. So that's what I've got on gold and silver. Hopefully you enjoyed that. And if you don't mind, hit the subscribe button, follow me, and be notified when there's new videos coming out. Till next time, everyone, trade safe, trade well, and take care.